What if everything you've been told about money is backward? What if the secret to building wealth isn't about being clever, but about being calm? While the world chases quick profits and hot stocks, J.L. Collins discovered that the real path to wealth is astonishingly simple, and anyone can follow it. The simple path to wealth began as letters to his daughter, teaching her how to build financial freedom without stress or fear. His message is clear. Money should be your servant, not your master. You don't need complicated strategies or endless financial news. You need a system that works quietly while you live your life. The first step is to spend less than you earn and invest the rest. That gap between income and spending is the engine of wealth. Once you master it, everything else falls into place. Collins reminds us that the goal of money isn't luxury, it's freedom. Freedom from worry, from debt, from having to say yes when you want to say no. Wealth doesn't come from chasing trends. It comes from owning your time. And the path to that freedom is much simpler than you think. Why do so many people make investing sound complicated? Why are there endless strategies, funds, and gurus, when most of them fail to beat the market? J.L. Collins argues that simplicity isn't just easier, it's smarter. He teaches that the stock market, over time, always rewards patience. But the financial industry thrives on confusion. Advisors, brokers, and so-called experts profit when you believe you need them. The truth is, you don't. The solution? Index funds. Instead of picking individual stocks or trying to time the market, you buy a small piece of the entire market, diversified, automatic, and low cost. This single move saves you from endless stress and unnecessary fees. Invest regularly, ignore the noise, and let compounding work its magic. The market will fluctuate, but over decades, it always rises. Your job isn't to predict, it's to persist. The beauty of this method is freedom. You no longer chase the next big thing. You own everything. Why do people fear market crashes when they're actually the best opportunities to get rich? Because fear sells. Collins reminds us that volatility is not risk. It's the price of admission for long-term wealth. When markets fall, most investors panic. They sell low, lock in losses, and wait for the right time to buy back in. But the wealthy do the opposite. They stay calm, keep investing, and let time smooth out the dips. Every market crash in history has eventually recovered and grown even higher. Those who stayed invested always came out ahead. Those who try to time the market usually lost. The lesson is simple. Don't let emotion drive your decisions. Automate your investments and stop watching the daily noise. Wealth isn't built by reacting. It's built by staying the course. In the long run, the market rewards patience and punishes panic. Why do so many people end up broke, even after earning more money than ever before? Because most never learn to protect what they earn. J.L. Collins calls this the defense of wealth, the quiet discipline that keeps your fortune from leaking away. The first rule of defense is to avoid debt. Every loan, credit card balance, or car payment is a chain that binds you to more work. True freedom begins when you live below your means and refuse to let interest own you. The second rule is to build an emergency fund, enough to cover 6 months of expenses. This cushion protects you from job loss, illness, or surprise bills without derailing your investments. Collins also warns against lifestyle inflation, the tendency to spend more just because you earn more. Each time your income grows, let your savings grow faster. That's how ordinary people quietly become wealthy. Wealth isn't just about making money. It's about keeping it safe, growing it wisely, and never letting it control you. Master your defense, and you'll never fear financial storms again. How much money do you really need to be free? Collins says financial independence isn't about a specific number. It's about having enough invested to cover your life without working for a paycheck. He introduces the 4% rule. If you can live on 4% of your investments per year, you're financially independent. For example, if your annual expenses are $40,000, you need $1 million invested. That's the point where work becomes optional. To reach that goal, save aggressively, ideally 50% or more of your income, and invest in broad index funds. Keep your lifestyle simple while your investments grow. Each dollar saved today is a worker that earns for you tomorrow. The beauty of this approach is that it works for anyone. You don't need luck or a massive salary, just consistency, patience, and focus. Financial independence is built one decision at a time, until one day you own your life completely. Summary of the system. 1. Spend less than you earn, always. Wealth begins with your savings rate, not your income. Track your monthly spending for 1 to 2 months. Identify what truly adds value to your life and cut the rest. Aim to save at least 50% of your income if possible, or start with 10 to 20% and increase it yearly. Why it works. You create the gap between income and expenses that fund your freedom. 2. Get out of debt and stay out. Debt is the enemy of wealth. Pay off high-interest debt, like credit cards, as your first priority. Avoid car loans, personal loans, or lifestyle debt. If you use credit cards, pay them off in full each month. Why it works? Every dollar in interest you don't pay is a dollar that grows for you instead of the bank. 3. Build an emergency fund. Before investing, secure yourself. Save 3 to 6 months of expenses in a high-yield savings account. Keep it easily accessible, not invested in the market. Why it works? It prevents panic selling and financial collapse when unexpected expenses hit. 4. Invest in low-cost index funds. This is the cornerstone of Collins' system. Invest automatically each month in Vanguard Total Stock Market Index Fund, VDSX, or an equivalent broad-based index fund. If you're outside the U.S., pick a similar total market ETF like VD or VTI. Reinvest dividends and never try to time a market. Why it works? Index funds outperform most managed funds over time, with lower fees and higher reliability. 5. Automate everything. Take emotion out of money. Set up automatic transfers. Salary emergency fund investments, spending account. Schedule automatic investing every month, regardless of market conditions. Why it works? You remove decision fatigue, emotional mistakes, and inconsistency. 6. Avoid financial noise. Stop watching financial news, stock tickers, or chasing tips. Check your portfolio only a few times a year. Focus on long-term growth, not short-term fluctuations. Why it works? Avoiding emotional triggers keeps you disciplined, the real key to wealth. 7. Learn the FU money principle. FU money equals enough savings and investments to walk away from anything that compromises your peace, a toxic job, a bad deal, or financial pressure. Start building this cushion early, even if small. It's not just about money. It's about control over your time and choices. Why it works? It gives you confidence, leverage, and true independence. 8. Stay the course. Markets will rise and fall. Ignore the noise. When a market crashes, don't sell. Keep buying. When a market rises, don't chase. Stay consistent. Why it works? The biggest financial mistake people make is reacting emotionally. Time in the market beats timing the market. 9. Make financial independence your goal. Decide what your freedom looks like. Calculate your annual expenses times 25 equals your FI number. Example: if you spend $40,000 per year, you need $1 million invested to retire safely, the 4% rule. Why it works? It gives you a measurable target and a clear path forward. 10. Keep it simple. Don't overcomplicate your portfolio. 1 or 2 index funds are enough. Don't chase fads like crypto, penny stocks, or get-rich-quick trends. Remember, simplicity plus consistency equals financial success. At the end of the simple path to wealth, J.L. Collins leaves you with a message few financial books ever teach. Wealth isn't about greed. It's about freedom. He reminds us that the hardest part of money isn't the math. It's mastering emotion. The market will rise and fall, trends will come and go, but the principles never change. Spend less than you earn. Avoid debt. Invest automatically in low-cost index funds. Ignore the noise and stay the course. Compounding will do the heavy lifting if you give it time. The secret is not to panic, not to chase, and not to overthink. In the end, wealth is just a tool. Its purpose is to give you the freedom to live a meaningful life, to choose your time, your work, your path. The real reward isn't the money itself. It's the peace that comes from knowing you're in control. The path to wealth is simple. Walking it every day is what makes you rich.